Ruchit Jain is with us, so is Mr. Subramaniam and Mohit Kaba also. Ruchit, good morning. If I may just start with you. First, do you see the move in Axis Bank yesterday? And Axis Bank charts are actually looking pretty weak, even when you look at the 1 month chart, really spreading elsewhere? Or do you think it's limited damage?
Good morning, Ashu. Ashu, overall, if you see the broader trend of Axis Bank and not only yesterday's trading session, then the broader trend of the stock still remains positive. There's a good higher top, higher bottom structure since last 3 months on this stock. So I think this corrective move which we have seen yesterday is just a part of an uptrend. Generally, usually when a stock moves up with this higher top, higher bottom formation, corrections usually become a part of this uptrend. It's not a linear uptrend wherein the stock would go higher and not correct not show any kind of corrective moves. So I think this is just a corrective move within an uptrend. This correction should be used now as a positional traders or investors to buy this stock on dips. So I think if we draw a channel from the lower end, from where it on the budget day when it started forming this higher top, higher lows formation, and around 515, 518 somewhere, that kind of range would now act as a strong support for the stock. So although we may see another 2 to 3% decline from current levels, but I think that should not be a worry for investor or traders for this stock. Let the stock come around 515, 518 in that range. Use it as an opportunity to again get into long in this stock.
Mr. Subramaniam, good morning. Let's get your call on the index.
So broadly, I think some sort of profit-taking mode the market is getting into 82, 85, 50 and above. We have seen some sort of resistance building up, and on the derivative front, we did see some selling taking place from the FIS on Wednesday. I mean, almost up to 850 crores. So that's caught attention of a lot of traders, and probably sensing that some sort of reversal or intermediate reversal might be on cards. But the trend broadly still seems to be on the positive side. Yeah, the results season, of course, in full cry, and of course that will going to dictate matters. And a lot of results have not exactly met up to expectations. So that is creating some dent in some of the counters, and probably that is also going to continue. Today we are having, I think, Axis. So what were they discussing? Axis really looks a little weakish. So the results again will dictate matters. But broadly, my sense is that we are in some sort of a profit-taking mode, and probably could continue. So if I were to put a immediate intermediate support for the market, it comes somewhere between 84.50 and 84.60. So mild correction definitely could be well expected.
All right, Mohit, how are things looking to you? I think in terms of the index as well, you've also been talking about that 84.90 mark, but talk us through how it's looking this morning, and also what will be top of your radar today. Banks, of course, continue to be the focus.
Right, so for me, I want to talk about the bank nifty first, because that is looking slightly weaker than the nifty, and normally can be considered as a lead indicator to the index, and it also has big weightage on the index. So on the bank nifty front, the way we've traded yesterday, especially rising weakness in the PSUs and certain public sector banks like Kotak and ICICI Bank as well, there's a chance we slide down to levels of 18,200. Now that on the nifty would correspond to maybe levels of 8,300 zones. That is not all that bad given the larger term trend, and given that we rallied very smartly from 6,800 or to 85, 8,600 on the upside. So a little bit of correction is fine, is justified, and we might have this phase where we'll kind of consolidate sideways in this maybe broader range of 8,300 to 8,600 for the coming few days, weeks, maybe even months, and then maybe break out on the upside. So as long as we're trading below 8,600, which seems like a very strong resistance, the bias should not be all that bullish. You could perhaps use these opportunities to book a little bit of profit in sectors that have done well, like PSU banks, metals, as well as certain private sector banks as well, which are correcting right now. So you could use it as a profit booking phase, even OMCs, the oil marketing companies, and maybe not look at getting in afresh heavily at these levels, because there is potential downside on the index, especially the bank nifty.
Right, you do have the sugar rally again picking up some steam, so I'll just mention a couple of those stocks. Parry Sugar, we'll look at the charts also. Smita, you can put up the charts if you have them. Also Dalmia Bharat, actually some financials of Dalmia Bharat aren't bad, and Parry seems to be making another breakout. Ugar Sugar also, I think it was in a freeze yesterday, but there are a number of sugar stocks, so I've just mentioned a few to you. Also Tata Metallics, very strong charts, and yesterday it held up. Harita seating. Some of the auto ancillary stocks have been relatively strong. I want to see the chart of Anant Raj. I don't know. I see a lot of people talking about that stock, but I've never seen it retain its momentum. I mean, okay. Well, actually, they're not bad. Can we look at a one-year chart on this one, Anant Raj? Maybe there's some kind of a fresh uptick. So again, this stock tends to go into a channel but starts to move again, but it's been a pretty strong move. I'd like to see some time confirmation. The Shekhawati Polyon. Can we just put up that? Shekhawati Polyon and see what's going on? Mohit, if you've had a look at any of those stocks.
Sure. So first, the one with Paddy Sugar is looking good. It's given a fresh breakout yesterday, locked up on upper circuit. There is potential for upsides, maybe levels of 60 to 62 on Paddy Sugar. Also, Ugar Sugar has been on my buy radar for the last 3 days. It's moved up smartly. This can continue higher towards levels of 65 next. As far as Harita seatings goes, it had given a fresh breakout. It cooled off from the day's high, but the up move is still on. We could see levels of maybe 620 to 630 in the coming few days. And lastly, Anant Raj, we've seen a big up move in it the last couple of days. We may not see continuous follow through for 3 or 4 days because there was a bit of selling that happened yesterday and it cooled off from the day's high. So maybe not the best entry point of fresh, but from a longer term point of view, the charts look good. One could enter from an investment point of view. You could see levels of maybe 70 to 72 for starters in the coming few months. A disclosure that it's part of my long only portfolio as well.
So Subramaniam, I noticed you've got a couple of sell calls on your radar.
Yeah, I think some of the counters seeing some sort of long unwinding and some corrections around the corner. So the first sell, of course, is L&T, where we have seen some shorts getting built up in the last 3-4 days. So I think we could see some downside levels of maybe 1500 could be seen. A stop loss of 1590 could be get. Next one, of course, Reliance. Post results, it has again become quite sluggish. It didn't even go up to 1050. I think corrected from 1030 itself. So now I think it could go back to again the 3-digit mark, 975. And the OMCs are looking, that's probably the exciting space. I mean, post the bonus announcement of HPCL, I think we could see some correction coming about. But I think a counter definitely one could bet on. Maybe accumulate, maybe not buy in one shot, accumulate. But I think slow and steadily we should see levels of 1200.
Ruchit, let's get your take on these OMCs as well. It was clearly a pocket that we've looked at closely last couple of sessions. What are the kind of levels you're tracking on these names, and are they on your list as well?
Probably these stocks since last almost I think 2 to 2.5 years it has been when these stocks have continuously forming this high top high bottom. And one good thing to see is that even at current levels when the prices are moving high, the volumes are coming in. So that's we can see the good amount of delivery buying even at current levels. So that puts into the stock into definitely a bullish zone itself. Still the momentum readings are not that overbought wherein some sort of corrective action could come in short term. So we are not expecting any major corrective move in the OMCs. I think the stock would continue to move higher. We are specifically bullish on IOC. The stock has recently given a breakout from a bullish flag pattern. So that's a continuation pattern, and as per the patterns, the target for the stock is coming around 545, 550 levels. So I think all the three stocks, in fact HPCL, BPCL, IOC could continue to move higher from current levels also.
One of the reasons I had mentioned to you that don't be tempted with a sector which is not in focus just because the stocks run up for a few days is because they will not hold, because there's no technicals to them. Can we just bring a Wockhardt? That's a classic example because 2 trading sessions ago it ran up about 13% and the very next day you saw an adjustment come through. So these kinds of patterns don't suddenly, stocks don't suddenly get into patterns, and if sectorally there's a problem, it's going to be a problem across the board. Yesterday a lot of banking stocks took a hit. It wasn't just Axis Bank. I want to bring up PNB, Union Bank, Indian Bank, Syndicate Bank, Bank of Baroda. Can we just start out with PNB so we can look at the charts? And as you can see, the selling was through the day. Now, why is this happening? Why am I mentioning the entire sector? essentially institutional investors are trying to reduce their exposure to financials because some of them are sitting with 40-50%. And if that happens, you will see a gradual fall in some of these stocks. Is it enough for the charts to change? Ruchit, your thoughts, because it wasn't just Axis Bank, PNB, Union Bank, Syndicate, Indian Bank, Bank of Baroda, you name it, Oriental Bank, Canara, Allahabad.
Ashu, if we observe a bit last 3-4 months price action of the stocks, then definitely the stocks have moved higher, and some of them even outperformed by a huge margin. So I think this is a time wherein some sort of profit booking is we are seen on the in the stock. So I think the stocks could correct further from current levels, all the specifically the PSU basket. But one needs to be more for stock specific over here. PNB definitely has rallied quite significantly. The momentum readings are quite in overbought zone, and that's why I think this could correct more than other stocks in this space. Union Bank would be the one stock to watch out in this space if anyone wants to create long positions in PSU Bank on dips. This stock overall, the chart structure is quite positive. If you observe the weekly charts, then definitely after a long period of time, the first high top, high bottom on the weekly chart has been in place in this stock. So I don't think the stock would go much below 120, 122 range. So I think one needs to be more stock specific now in PSU banks. Be a bit cautious. Just rally is already behind us. I think the short term rally, a bit of consolidation could come in before again the up move starts in the stock. Avoid going aggressive longs in stocks such as PNB, Syndicate Bank, and Union Bank is one of the stock which I think if more dip comes around 122 levels, that would be a good buying opportunity for this one.
All right, Mr. Subramanian, let's get a few of your strategies as well within the banking space. What would you advise on the derivative side?
See, we have had a stellar rally on the PSU banking pack. I mean, but I think we need to have, some sort of this rise has to be vindicated, and that's the acid test. We need to have a couple of good, positive set of solid numbers from the PSU banking, which will really convince people that all this rise is well justified. So from that aspect, I would still be inclined to be bullish on the pack, because going by the derivative action that we have seen, we saw some excellent rolls for the July series, and the market definitely sensing something positive for coming about for this pack. So of course, whatever we have seen the last couple of days, quite natural that these are all stocks which have seen such a massive cut. Now we have seen some bounce back, a pretty sharp bounce back. So obviously the traders are not comfortable holding on. So a very interesting space really, and so if I were to really go, probably wait for the correction to get over. So the three counters which we were betting on were SBI, Bank of Baroda and Union Bank, but not two other counters which probably could also be kept in focus. One is Canara Bank, where we have seen levels of 250, but I think if it cools off to level of 220, 225, I think a decent pick. So I would definitely be very keenly watching for the results, because if that justifies even 50% of this rise, I think we could have some serious run up in all these counters.
Mr. Subramanian, if we can just get away from earnings, because earnings is a regulatory requirement. I mean, so there was a time when you got earnings once a year, and before that, of course, companies. I actually saw a prospectus sometime in the early 19th century saying the promoters have good credit and nothing more needs to be said about this. So even that disclosure let stocks go up. I just wanted to ask you, in this current scenario, is there specific upside, or is the risk very high?
Well, the risk is definitely high for the simple reason we have seen that rise, and as I mentioned, all this rise has to be vindicated by the results. So the results so far have not exactly been up to the mark. I think we are having more set of disappointments than positive set of numbers. So I think from that aspect, market may not exactly receive. In fact, there is no scope for disappointment. The sort of rise we have seen. So that is the problem. We have seen some massive rise in many of these counters, and I mean, they are not justified by the results. So they have come down crashing. So that is a point of worry. So definitely the mood seems to be quite positive, but at the same time, better to be a little cautious after see this sort of rise. So one would be better off in maybe booking profits, maybe 50% or so, and stay on the sidelines. Just wait for and try to pick up some positive cues from the the set of results which come. So I think that will be a better approach rather than getting carried away by the rise that we have seen the last 1.5 months.
Ruchit, I wanted to put up Infosys, Wipro and TCS. Is it time to go short on some of these stocks? Wipro, I'll just put in a different category only because there's not much float in that stock. 73% still with the promoters, but Infosys has no such problem. And I'm looking at the charts, and the stocks have lost bottom. The break is pretty severe. Can you bring up TCS also? Let's see how severe that break is. You can see it on the chart itself. They've just and I'll put up a 1 year. So actually, TCS is the best out of the lot. If you want to use a technical term, they call it a double bottom. Maybe it's formed a double bottom and held up. But Infosys and Wipro, they look dangerously close to violating many supports. Your thoughts, Ruchit?
Yeah, so overall the chart structure for these stocks are not that positive. Even if we see last 1 month, in spite of markets doing quite well, these stocks have been underperformer, and IT sector have not given that positive returns. In fact, after the results were out, the stock Infosys did give breakdown below its major support of 1160, which puts this stock into corrective mode. But still, I think if anyone is looking to go fresh shorts in the stock, then this is not the time to create fresh short position, because the risk reward won't be much favorable in your favor. 1160 was the major support for the stock. The stock has broken those support, and now it's trading around almost 100 rupees lower than those levels. So if you go short at current levels, then the risk reward won't be that favorable. It's quite possible the stock would go into consolidation phase now on the lower levels. 1040, 1050 is the support level, and higher levels 1140, 1160, which was the support, would now become a resistance. So if the stock gives a pullback move and comes again up to 1140, 1160, I think that at that time one can look to create short positions if the stock continues to stay in this range. TCS definitely, as you said, it is one of the strongest in this in the large cap IT space. So I think even this stock could consolidate, but definitely one should not attempt to create any short positions in TCS. Wipro could correct further from current levels. 510, 515 is what we are expecting. The stock could come in near term. The strong support zone at those levels, which were around the lows registered in the month of February. So I think one has to take a call in Wipro, then definitely around 540, 545 one can create short positions over there. Keep a stop loss below above 560 for target of 510 to 515.
Okay, I want to just quickly touch base on ITC because there are different ways you could look at those numbers, but what was your reaction, Mr. Subramaniam? Some amount of hit on the margin side.
Yeah, but I think I would be positively inclined on ITC. I think, the FMCG space itself, we have had such stretched valuations, and ITC has not had the best of, times the last couple of years. We have had, I think, attacks from all fronts, from excise fronts, then regulatory issues. So they have had some tough times, and in that background, I think they have performed reasonably well. They even managed to give a bonus last quarter. Yeah, the results are not probably tagged below expectations, and probably could become little sluggish to maybe levels of 235, 240. But I think it will be a decent pick. Now they are also getting into the FMCG, that is probably could take the focus, and let's assume that probably the worst in terms of the cigarette division is behind us. So from that aspect, I think I would prefer to buy an ITC on declines.
I was just looking at the cash flows of ITC. And actually, it's a cash-generating machine. Doesn't matter. The government can increase the tax by 300%. Hardly anything will happen because, vices don't leave people, so they're just going to continue to smoke. My thought to you is this. Is it an acquisition candidate? Because, you see, I've been trying to follow ITC closely. And beyond the cigarettes, I'm not really clear what's their strategy. Sometimes they get into hotels, sometimes they start producing, FMCG goods, sometimes copies. Why don't they just give this out either to shareholders? Otherwise, the company costs $30 billion. It's not a huge amount to just kind of acquire them in a hostile takeover.
Well, I think times will tell whether that is going to happen. But broadly, I think if I were to see, their businesses have done reasonably well. In fact, particularly even the FMCG side, they have made some steady progress, and they have been generating a lot of cash. And even the ITC hotels that you mentioned, I think once upon a time used to used to be separately listed. Then I think they had that merger. Then you had a paper division which was doing disastrously. They got merged with ITC. So they are basically consolidating the entire thing, and probably they are having a consolidated results. But broadly, I think, going by the vulnerability of a cigarette business, I think it makes sense to have some cushion from an FMCG or maybe a paper or hotels, which offer some sort of defensive mechanism for the bottom line. So from that aspect, I think, as you mentioned, it's a seriously high generation cash business, and also the fact that all these excise rises are not going to exactly dent their margins, or for that matter even in terms of consumption. So I think a decent set of results, which as a shareholder, I think that's what matters. So from that angle, I think from a FMCG space where we are having such rich valuations, I think it offers a decent return at dips.
Okay, let's take a very quick break. We'll continue this conversation on the other side. Do stay with us.
Thanks for staying with us on Street Smart. And one of the things, because it is Street Smart, we want to make sure that we are all smarter on the street. I won't get into Wall Street, Dalal Street, because now everything is gone on computers. So let's look at ITC. Today is what, July 22nd, what?
Yes.
21st. So about the exact same day, 3 years ago, ITC used to be at 246. 3 years from that day, ITC is at 249. If I was a shareholder, I made exactly 3 rupees. 3 in 3 years. Wow. So obviously, as a minority shareholder, I don't know what they seem to be generating 10,000 crore cash. They seem to be doing all kinds of other stuff, buying hotels, but it's not. So, Mr. Prem, that's what I was driving at. Because I don't get to participate in their paper division. I don't get to participate in their business. I need my dividends. If they don't have much use, and for 3 years people aren't really getting, why don't they pay a special dividend of 400-500 rupees and give the cash out? People have been holding this forever.
Yeah, maybe your views will be heard by the management, and we'll have some positive news coming about from the company. But broadly, yes, it's a cash generating business. End of the day, the returns matters, and I think by that aspect, probably it has not exactly met up to the expectation of investors. But then they have also had their share of woes in the last couple of years, which has difficult hostile environment where they were conducting their business. So that from that aspect, I think they have done a reasonably decent job.
All right. Mohit, any strategies you want to run us through before we head into pre-open?
Sure. So there are a couple of buys and sells. The first one is on Ashok Leyland. It's looking good in the charts. It's seen a good up move in yesterday's session. We could see levels of 100 to 102 out here. It's a buy with a stop loss at levels of 95.50. Also, what I like on the what I want to give sell on is SBI. It's looking weak on the charts. Yesterday was a down day for SBI, and we could head towards levels of 220. So that's a sell with a stop loss at levels of 227. Also, what's looking weak is Hindalco. That also has seen a down move in yesterday's trade, and this could move down to levels of 130. Stop loss of levels of 135.
Okay, 30 seconds to go for pre-open and for the currency open this morning. So continue to keep your eye out on some of those banking names. We did see a bit of a cut yesterday, and remember, Access numbers are the ones that we'll be tracking today as well. A whole host of stocks that we'll continue to watch out for in terms of reactions, post earnings. Ken, Biocon, for instance, some of the names there, even an ITC to some extent. So the index, however, continuing to look kind of flat in the SGX so far, but still holding fort around 8,500 and in line with what we're seeing globally. Earnings really continue to be the main point of focus right now. On your screens, slightly divergent. We'll just wait for that to even out, but still, easily is scalable, that 8,500 mark within the next few minutes. So we'll just wait and see how it shapes up. The banking names, SBI is quiet. Pull up Access and see how it's looking this morning. ICICI is seeing a little bit of weakness in the pre-open. Access just down about 0.5% in the pre-open right now. Let's run through a few more of those stocks for you. Let's also take a look at some of the other heavy hitters of late. So an Aurobindo, a Power Grid, Tata Steel, just to take a look at how some of them are doing. We have seen brief spurts there. So Aurobindo the last few sessions, for instance, even a BPCL, for instance, has been one of the top movers. So pull up some of those names as well, just to see if we're maintaining that momentum. But for now, it looks like it's pretty quiet all around.
Yes, Ava, and so I'll start with Jain India. Can we just put up Jain India and see where it is? So that you don't think I'm just picking the numbers from somewhere. On the same date in 2012, Jain India was at 315. On the same date today, Jain India is at 178. That's a loss of 40% for you. So, that's why please don't get excited by quarterly earnings, because some of these stocks have just given you nothing. And so quarterly earnings mean nothing. What will happen is you will go in, you'll push the stock up by 10%, you will finance somebody else's exit, and again on the next day the stock will be back down 10%, and you'll have nothing out of it. Okay, so please just take a look at where these stocks are coming from before you get into that. On the Nifty, I'd just say that if we can hold 84.90, we should be fine on a very short support level. Beyond that, of course, it could head anywhere. Can we look at Axis Bank if we have it? And also HDFC Bank, if those two stocks are there. So Axis, we don't have anything right now. You have HDFC Bank. Yeah, so let's see what happens in the Nifty, Abba, because maybe that's the most critical part today.
Okay, Mr. Subramaniam, how are some of these pharma names looking to you? Because let's talk about Aurobindo, Lupin, some of the heavyweights. They've actually been seeing a fair amount of strength lately.
Yeah, I think entire pack, Aurobindo is the one which is, they've also had lesser of this negative news flow, but I think that is by far the one which is looking pretty stable. And Lupin, of course, I think the management also come out some sort of clarification where some of the cloud over those plans and all getting lifted. So I think that sector is now getting more visibility and some relief rallies being seen. Of course, again we have to wait for the results. But it's IT and pharma which were a bit in a shadow. Pharma is coming out of it. So let's hope and hope that this continues and we do have some positive news flow coming about from this entire pack.
Would you look at the mid caps as well, or would you just focus on some of the heavyweights? So, for instance, even yesterday we saw everything from an Orchid to a Marksans to the whole spate run up. Biocon's just come up with earnings. So, would you stick to the heavyweights, especially on the derivatives?
No, I think even some of the mid caps offer decent returns, likes of Alembic. Even the Alembic Limited, which is quoting at around 35 to 40. That's a decent bet. I think it has not seen any upside, but I think decent bet could be seen. Then something like Marks and Pharma, which has seen a very decent correction. Of course, it went up. Then something like a Kaplan Point. I think the management is also. There's some stock split to talk about. So there are a host of stocks which are looking good, and possibly we could look at some of these counters and maybe catch a good uptrend coming about in many of them.
But just to give you an indication of what was happening, Aurobindo Pharma 4 years ago was just a 55 rupee stock, just 788. So, you've got about some 10-12 times return. Lupin actually was a 550 rupee stock at 1685. So, you've gotten about a 300% return. However, Lupin has a very big trading range. If it cannot hold up, it can go to 1480. If it can hold up, then the next resistance is about 1850. Ruchit, your comments, if I can. Aurobindo, when you look at longer term charts of Aurobindo, it made a clear run from 55 right up to 878 around Jan 2016, but after that it's gotten into a range, and the range actually hasn't been able to break the 1800 level again, but it has tested the 1400 level. So if you can talk about Aurobindo from that perspective, because I'm not talking about a day trading longer, and Lupin again has gotten into some kind of a range which varies from 1480 to 1850. So that big singular trend in secular trend in both is already over.
Yeah, Ashu, if we observe this long-term charts on weekly and the monthly charts, then definitely that uptrend which was there, which has already ended in the stocks in the month of January. Now the thing is that after this humongous uptrend which was there for almost 3 to 4 years, the stocks have now slipped into consolidation phase. So these stocks, I think, on a broader trend would consolidate now rather than again resuming this uptrend sooner. The trended move, if we observe, was for almost 2.5 years or 3 years. So definitely, if we see a time-wise correction also, then I think for next, at least this time-wise, this should take about 12 months or 14 months of consolidation. After this 3 years of trended move. So So I think if we see the broader charts or longer term degree charts, then these stocks, Lupin, Aurobindo Pharma, Dr. Reddy specifically, all these three stocks would stay in the consolidation phase for some time. Now what should the investors or what should the traders do? Just follow the consolidation range. Whenever the stock comes at the lower end of the consolidation range, you take that as an opportunity to opportunity to buy the stocks. So definitely among these stocks, the strongest of one looks Aurobindo Pharma. The stock we have seen that in this consolidation has taken a good support around 650-700 range, and again good volumes have started coming in when the stock was around 650-700 range. So I think on the higher side, this stock has potential again to move up to the higher end of the range, which is around 830, 840 kind of levels. So even if you are a medium term trader, then I think Aurobindo Pharma would be the first pick amongst the pharma space at current levels. Then Lupin, in case if Lupin, the levels that you have mentioned, that it's in a broad range, let some correction come. Whenever the stock comes to the lower end of the range, use that as an opportunity, as a buying opportunity, and not after this 8 to 10% rally which you have already seen. So I would wait for some corrective move in the Lupin to get into the stock. But Aurobindo Pharma, definitely even at current levels, if one has a time horizon of next 3 to 6 months or so, then at current levels one can pick up.
One of the stocks that's been on a singular trend, hasn't violated the trend at all, and still that secular long-term trend is continuing for the 4 years, is Piramal Enterprises. Your thoughts on that, Ruchit? Because there's been absolutely no break in that stock. It's been on a clear uptrend. In fact, the trend accelerated around the beginning of this year.
The momentum is quite strong in this stock, and I think the stock has potential to move further higher, because we are seeing that even at current levels the volumes are quite decent. It's not that because the stock has moved higher the volumes have started dropping. There is no divergence on the momentum reading, which still indicates that the upside is still there in this stock. Even if we see the reciprocal retracements of this recent small corrective move which had taken place, then also on the higher side targets are coming around 1720, 1730 kind of levels. So I think Piramal Enterprise would continue to do well. This would be the stock, one stock which has already outperformed the other stocks, and even in near future it could continue to move higher. So around 1730, 1740 looks quite possible target in near term for this stock.
Okay, we've got pre-open quotes on your screen. Very, very quiet. Infi, Wipro, TCS continue to be on the downside. Reliance is flat. Hindalco, ACC, Bajaj Auto, Idea, IndusInd Bank, SBI, some of the other names there. So it's really quiet. On the upside, though, some amount of just a slight. ITC is just up 1%. Tata Motors, BHEL, the Power Grid, Tata Power, both of those names as well. Some of the names there on the upside. Some of these power, like utilities, Power Grid, Tata Power, they have been seeing consistent buying. Mohit, I think you were looking at Power Grid some time ago as well. Does it still appear on the charts to you?
Well, Power Grid has seen a big correction in yesterday's day and trade, taking out maybe a week and a half's up move. Now, it's not best to get in now because there could be further downside, maybe towards levels of 158, 157. So actually one could sell Power Grid for targets of 158 and have a stop loss at levels of 164. So it's looking weak in the very short term, like the PSU and the metal stocks. But there are support zones very close by, and we have to wait and see if we can find support at those levels or we continue to break lower.
What do you think of some of the utility counters?
Well, very difficult to back them. They are all they offer the momentum, but you cannot hold on to those stocks on a consistent basis. So for the time being, I think I would give a skip, considering the fact that market itself is some skittish phase, and probably give a pass. But one could look at something like a PFC. That I think that's becoming little. We are seeing some decent buying coming about. They also announced 1:1 bonus. So one could accumulate PFC maybe. I think you should see some decent returns maybe in a couple of months.
However, one of the most important things that we are kind of hardwired to is somehow if earnings are good, stocks will move up. So I just want to share with you, it was only in 1880 that Mr. Vanderbilt taught this new trick to John Pierpont Morgan, saying look at projected earnings to get better IPO listings. Before that it was only current assets. So please don't get stuck with that mindset. The market can go to 11,000, 12,000, 14,000. Once it leaves this, so you have just been hardwired to continue to believe somehow when the quarterly earnings will be good, blah, blah, blah will happen. It was just an invention of Mr. Vanderbilt. He just came up with it so that at least IPOs can be priced crazily. So that's all that was happening. So please don't get into that. This market has momentum. Don't challenge it. You will miss the rally if you keep sitting back and saying, oh, the projected earnings are going to be blah, blah, blah. So just your thoughts, because we're so hardwired, but who knows whether the PE is 5 or 10 or 15 or 50 or 56. We saw that in the dot-com boom. We forgot about the PEs completely.
No, in fact, the point is well taken. I remember in the last rally, there were so many stocks which we exited very early. I mean, looking at maybe some overbought pattern, very good stocks which, one thing which really comes to mind, some everyday industries. I remember we exited pretty early, and it went well beyond our. So sometimes, yeah, if you do some sort of timing, that sort of also goes against you, and one has to go with the broader trend. So I think that will be a better strategy rather than doing too much of timing and hasty entries and exits. So that point is well taken, and one has to focus on quality stocks, which, as they say, in cricket, form is temporary, but class is always permanent. So I think that is something one has to keep in mind. When you are playing in the markets as well.
Mr. Subramanian, thanks for joining us. Have a good weekend.
Thank you.
As well. Okay, we're just getting out to open now. I think we just have a couple of minutes left to go. It looks like a pretty quiet start today, though. Let's just take a look at anything else that's catching our eye so far this morning. Even in the mid caps, I think it's looking a bit tepid. Ruchit, from the broader markets, any other strategies you'd like to run us through?
So from a trading perspective, we are recommending to go short in Maruti at current levels. Although it's just a short-term recommendation, the stock is trading in a rising channel. But if we observe the daily charts, then around the higher end of the channel, the stock has formed a bearish candlestick pattern. So this, so there is a probability of a corrective move within this uptrend. So for this correction, minor correction, one can go short in Maruti, keep a stop loss above 4,528 for target of 4,260 in near term. The second stock we are recommending is a buy in Havells. Probably since last couple of months the stock is trading in a sideways range, but if we see the positional charts, a bit longer term charts, then definitely the stock is in a broader degree uptrend. So within an uptrend, the stock is going through a time wise correction. Now last couple of trading sessions, the stock has shown a bit positive momentum with quite good increase in volume. So we are expecting resumption of the uptrend in Havells after this time correction. So one can buy this stock for short term. Keep a stop loss below 353 for target of 382.
Yes, Mohit finds the market a little boring today because I can see his energy is low. But Mohit, just tell me, on the banking side, do you think we could see a repeat of technology, which is basically that the trend has been interrupted, or do you think the trend is still intact?
Well, the broader trend from a longer term point of view is still intact. However, you have seen, let's look at the recent lows of the Brexit lows of 17,000. You've run up to 19,100. Now, if you've seen a 2,100 point rally, it's, I think, okay to give back 600-700 points on that. So, from 17,100, you could maybe come down to 18,400, 18,200 zones, which are strong support zones in the very short term. So it's only normal for us to kind of retrace a little from the highs, from a big up move that we've seen in the very recent past. And especially on the banking side, you didn't see really good results on Kotak. Even ICICI is looking weak. Some of the PSU banks are looking weak. So there could be some kind of overhang. The Nifty also has strong resistances around 8,600 zones. So we could see a little bit of retracement and a little bit of give back on the banking sector. And we could head down towards levels of 18,200 in the coming few days.
Okay, just counting down to open now, and I can already start to see the quotes actually coming in. So while we're holding steady and market breadth is more or less okay, there's really not much of a move on either side. It's still looking a little quiet. But